Since 2023, the Swiss external asset managers have been operating under the FINMA authorization regime. Even though the environment is buoyant currently, they do still face a few challenges. First challenge, the necessity to continuously adapt to the new environment. Increasing costs are derived from the ever-demanding FINMA, which means that the EMs need to continuously find and generate new revenues. Second challenge is the renewal of the ownership structures. One estimates that 1/3 of the EMs will face in the next decade a generational change. So it means that they will have to find new shareholders and top managers, and they will be competing for talent, and actually they will be also competing with the banks that will be targeting the same pool of talent. Third challenge, digitalization of processes. The EMs will have to continue digitalize their processes, most of the times with the support of the banking custodian partners. And fourth challenge is to cater to the needs of the next generation, to understand the next generation. These new clients will necessitate a specific service offering that only today few EMs, and actually few banks as well, are capable of offering. Next to those challenges, the next big challenge that the EMs will face is going to be the first FINMA prudential audit. This will be based, of course, on the risk profile of each EM structure, but whilst every, almost every EM will easily clear the hurdle, the ever-demanding regulation from FINMA might prompt some EMs to question their independence in the future. One way for EMs to basically face the rising costs of operating might be for them to set up a joint service company. That would mean pooling together resources in order to provide service functions to EMs. That could be in the area, for example, of financial research, of back office operations, of risk management, of compliance, of HR and payroll administration, of IT tools and maybe AI-enabled workflows, and as well of accounting. This would enable the EMs that are shareholders or clients of that joint company to benefit from lower costs and therefore be more efficient in their business. Today, an EM that faces difficulties to survive in the current environment may decide to join forces, meaning to enter into an M&A transaction in order to survive. This may come at the cost, of course, of a certain loss of autonomy, but the EM would benefit from additional skills and competencies, additional capital to fuel the growth, a more robust organization, more diversified range of products, that is a broader service offering, and finally, access to new markets and new clients. Today, the consolidation in the EM sector is fairly slow. It might pick up, though, in the future because of the ever increasing demands from FINMA. The critical size of an EM structure today is hard to assess given to the large diversity of business model amongst Swiss EMs. The new regulatory framework today establishes the EM as a true key player in the Swiss financial center. Looking ahead, one can say that the EMs have a bright future based on their diversified service model, based on their open architecture approach, and as well based on their capacity to innovate. So I think in the future the EM business model will remain attractive, and provided that they can master the challenges we identified previously, they will certainly see profitable years ahead of us.